Hello. The company being analyzed today is Fujiyama Power Systems Limited. This is a company which manufactures solar inverters, solar panels, and many more such solar products. Today, we're going to analyze the company's financials, what it actually does, and its insanely massive future growth plans. So let us start. First, we have a market cap of 6,848 crores, so not a small company. Current price of one share 224 rupees. Stock price to earnings ratio 36.6 times. High return on capital employed. High return on equity. Very important metrics. Then comes the profit and loss of the company from fiscal year 2020 all the way to fiscal year 2025 on the right. Here we have sales. All of these are in crores. Operating profit, also known as EBITDA. And at the very bottom, we have net profit. So in fiscal year 2020, the company produced sales of 229 crores, operating profit 28 crores, operating profit margin 9%. Then 2022, fiscal year 2022, 506 crores in sales. Okay. Then we move all the way to fiscal year 2024, 925 crores in sales. And finally, the blockbuster year, 1,541 crores of sales in fiscal year 2025 with 249 crores of operating profit, 16% operating profit margin, and at the very bottom comes 156 crores of profit after tax. You can see the massive growth in recent numbers. Let's see these in percentages, the growth. Compounded sales growth over last 5 years has been an amazing 39%. Last 3 years, 45%. TTM trailing 12 months. We are currently in January. Previous January, the last 12 months, trailing 67% sales growth. Compounded profit growth. Last 5 years has been 71%. Last 3 years, 76%. Previous 12 months, 245%. And even 5 years ago, it had high return on equity. Now, let's come to the company's cash flows. Pay attention to the top figure, cash from operating activity. In fiscal year 2021, minus 10 crores, okay. Then minus 58 crores, 78 crores positive, 85 crores, this year 18 crores. At least the last 3 years are at least positive. Now, what does the company actually do? So, Fujiyama Power Systems, solarizing India. Now, this is a bit blurry, so I think we can go in a bit deep. Yeah. So 500 plus stock keeping units, 5 patents granted. Solar products, 500 plus stock keeping units. A stock keeping unit may be like a product which has some level of distinctiveness, some level of difference from the other products. For example, you can see this solar PCU. From what I understand, this could be a separate SKU, even if they're like the same quality, same technology, everything, but the size is different. Even if the color is different, different SKUs. So we got solar PCUs, okay? We got solar charger controllers, solar hybrid supplies, we got solar cells, solar panels. A TopCon is the like the new technology, the most updated technology, I believe, in solar panels. You got chargers, what else? E-rickshaw chargers, marine engine start chargers, lithium ion batteries, tubular batteries. They're manufacturing all of these products. There are 4 facilities. You can see many different areas. Very nice. Uttar Pradesh, the main one, and one new facility coming up in Madhya Pradesh. And they have 5 plus agents. Patents. Now, look at this. B2C revenues. They're not selling to businesses primarily, they're selling to end customers, non businesses. 90% plus revenues coming from direct customers. 1 million plus end customers selling in 23 plus states, and they have, I think, 1,100 outlets. They're like a kind of their own outlets, Fujiyama Power outlets, where customers can come and, of course, buy. And there are 5,900 dealers for like distributing the products, distributors also, of course. But 1,100, they're like, I guess, their own outlets branded. It's franchise, but still nice. Okay. Business model dynamics. Integrated business model B2C focus. As we saw, fiscal year 2025, 89.5% revenues came from this green B2C. Then, increasingly tapping DCR panel market. What is DCR? Domestic content requirement. The Indian government is now requiring solar panels to have more and more components in them made from, or sorry, made in India, not imported. Like a solar cell used in a solar panel. Solar cell is used in a solar panel. So these must be now increasingly made in India. And they're now going to have their own facility, Dadri facility in quarter three fiscal year 2026. We are currently in quarter four. So this should be made now. Solar panels are already manufactured across India. Then the PM Surya Ghar Muft Bijli Yojana has a target to install rooftop solar in 10 million households by March 2027. 10 million households target solar rooftops, and solar rooftops, good product. I think it's an important product for the company actually. And here you can see in fiscal year 2025, 74.2% of its raw material was procured in India. The remaining was procured from internationally, 25.8%. And out of this 25.8%, 91% came from China importations. So majority products are not imported, but there is a level that is in fact imported. Now let us go to another page. All right. So here we have the kind of what you can say summary of the balance sheet, a kind of very simplistic summary. So as of September 2025, the company had around 157 crores in long-term debt and 516 crores in short-term debt. Only only 8.7 crores or 87 million rupees, here it is, 8.7 crores in cash and cash equivalents. So net debt, that is debt minus cash and cash equivalents. So this minus this, 665 crores of net debt. Debt was 665 crores more than cash and cash equivalents. And it only had around 527 crores of equity. Net debt to equity was 1.2 times. So this divided by this 1.2 times. Then it had its IPO. Okay. Initial public offering, it's written here. IPO. They raised a total of I think 828 crores. It's written, see, IPO offering 828 CR, out of which 275 crores was used in paying down debt. So after the IPO, they now have around 241 crores in debt. Cash and cash equivalents, no increase, and the remaining 600 crores for the IPO from the IPO was used in the equity, infused into equity, which now decreased the net debt to equity to 0.35 times, which is way better than before. Look at this. This is very important. They have given the net working capital days. And if you don't understand, even I don't understand, but take a look at this. Receivable days and payable days. Receivable days, you are to receive something. How many days does it take to receive something? So, what does it take to receive? What are we receiving? How many days does it take the company to receive money back from customers after it has already given the product to customers? And you can see it's 14 days, the latest. In fiscal year 25, 24, H1, 14 days. Lower this metric, the way better it is for the company's cash flows. Very important. And payable days, how many days does it take to pay? Who are you paying? Your suppliers. How many days does it take for you to pay your suppliers after they supplied raw material? You can see 52 days. The longer this metric, it's kind of better for cash flows. Better for cash flows at least. So it's getting paid faster from customers than it is taking to pay its suppliers, which is good for cash flow. Very nice. But inventory days, how many days does it take to convert inventory into like revenue? 108 days. The lower this metric, the better. And combining all of this in a formula, we get the net working capital days. Lower this metric, the better. And it seems it has gotten kind of lower, 62 days, but overall 70 days, okay. But do pay attention to this metric. Let us see if this can get down in the future and they can improve their cash flows. Then, now this is important. This is amazing. So, you see, total production capacity. We have the total production capacity. The green one is the existing capacity. Okay, the green numbers are the existing capacity. The blue one are the new capacity expansion coming up. So, solar panels, they currently have around 1039 megawatt. They're adding 2600 megawatt. They're adding more than double the existing. This will triple their existing capacity, more than triple, by the way. Power electronics, I guess solar products. 1743 megawatt current capacity. They're adding 2000 megawatts. Tubular batteries, they're not adding anything here. Lithium ion batteries, they currently have 545 megawatts. They're adding 2000 megawatts. Megawatt hour, sorry, megawatt hour worth of capacity. And solar cells, they currently have 0 megawatts of capacity. No capacity solar cell production. They're adding 1000 megawatt. So company is going for some massive, massive expansion. Sorry. Then let us move on here. So manufacturing product matrix, whatever this means, but okay, take a look at this. So current capacity 1039 megawatts. In quarter three fiscal year 2026. We are currently in quarter four, so this should be finished. They're adding around, first of all, 1000 megawatts of solar cells in quarter three only at Dadri and 600 megawatts of panels. Then in quarter four at Ratlam, they're adding around 2000 megawatts of solar panels. So in quarter four, we are currently in quarter four, and they're adding around 2000 megawatt hours of lithium ion battery capacity in quarter four. And power electronics, I guess they're also adding in quarter four. They are adding a lot of this capacity is being added in quarter four only, which is good, which is great. Okay, okay, okay. And take a look at this. They are Fujiyama Solar Systems. Okay, Fujiyama Solar is a well-rounded leader in the rooftop solar industry and a one-stop shop for solar products and solutions. So rooftop solar, it's actually what do you say, a leader in this. And down it's written, they've contributed 2 gigawatt plus of top solar, rooftop solar installations across India in last 4.5 years. So rooftop solar installations in India, more than 2 gigawatts in the last 4.5 years. I think you can see it's available, the total number of gigawatts installed. So you can see their market share maybe. But they're saying they're leading, or one of the leading. And as you can see, they want to be a one-stop shop for solar power generation systems for consumers, not businesses. So we as a consumer, if we go to a Fujiyama solar outlet or a store, we can be a one-stop shop. Whatever we want from solars, we can have it. We can have a inverter, we can have a panel, we can have a lithium-ion battery, tubular battery. We need something for off-grid solar inverters, any kind of inverters. You need chargers, EV chargers, they have it. You need an like a PC, they have it. I think that's a PC. I hope that's a PC. You can have high frequency, you can have chargers, they have it. So they're trying to be a one-stop stop for anything related to the solar power for like end customers like us. So that's I guess their like vision. Then ongoing expansion of pan-India distribution network. Okay, so as you can see, we have states. We have darker green states and lighter green states. So earlier, the darker green states, they're more like what the presence is more in these states in terms of numbers. Oh, here we have. The green ones are the covered, the lighter green ones are the growing, the dark green ones are the special focus. This is potential, this is untapped. So earlier, we only had a few states covered. What is it? I guess this is Rajasthan, uh, I forgot the states. That's great. I think that's UP. So Rajasthan, UP. Is this Haryana? I think it's Haryana. And now it's covering all the states: Maharashtra, Gujarat, Rajasthan, Uttar Pradesh, Haryana. I forgot what this state is. Kerala it's covered. Tamil Nadu is covered. What is this? Haryana. This is Punjab, of course. This is, I guess, Uttarakhand. What is this one? I forgot. And then we have the special focus states. So they have not covered all of these states. I think that's West Bengal. I get, and this is Odisha. I remember some stuff. And growing. So this market, I think that's Madhya Pradesh, and I think Bihar, they are growing. And Uttarakhand is now growing. Earlier it had potential, and there are few ones still untapped. And of course, so they're growing in more and more states. Earlier, three states covered, now nine are covered. And growing channel partners like distributors, dealers, shoppers, like shoppies, like the franchises, their exclusive outlets. Remember, they have that a lot of their own outlets. Then Annual financial performance, here we are seeing this. Now, return on capital employed, very important, 41%, 26.6%. Right now, 25.1%, but I guess that's only including, yeah, the half year financials. So quarter one plus quarter two profits. This is half year, okay? Half year means the like 2 quarters combined. So it's lower because, well, see, return on capital employed. The numerator is the return. That is, it can be either net profit or EBITDA, depending on which term you're using. So of course, the first 2 quarters will have lower of that. They will have lower like EBITDA or net profit than the full fiscal years, because full fiscal years have 4 quarters. H1 only have 2 quarters. Then ROE again 39.4%, rapid rise in few years. Again, the same reason why the H1 has been lower. And net debt to equity, okay. Now, okay, post IPO, it's 0.35, which is way better. So post IPO, 0.35. It does bring the question how they're going to fund their expansions. Is it like internal cash flows? Is it their like own money, or they're raising debt? Maybe they're using IPOs. I'm an idiot. I should have shown that. Okay, I will just show that. I remember it right now. Revenue from operations, 53% CAGR. Look at this. The first 2 quarter revenues are already reached 1,165 crores. These are in millions of rupees, okay? Then EBITDA, you can see risen so much, 119% EBITDA growth. And the percent here is the EBITDA margin. So you can see EBITDA margin has grown from 7.8% to 16.1%. Latest quarter twos, like the first 2 quarters of fiscal year 2026, 17.9%. Profit after tax margin has also grown 3.7 to 5 to 10.2, right now 11.2%. And this should be the end. I think this should be the end of the segment. But before that, hold up. Before that, let us take a look at this. Where is it? Where is it? Where is it? Where is it? Yes. In this IPO, yeah. So 275 crores already used for debt repayment. We covered that. But 180 crores out of the remaining 600 crores, right? Added to equity. 180 crores will be used for the 2 gigawatt Rattler and 145 crores for general corporate. I actually don't know what general corporate means, but it seems that for, first of all, it's written here, investment in Dadri. They already looked at 199, 159 crores. Yeah, 159.4 crores were spent in the Dadli one, and it seems that it's already included. So in this net debt, now this debt had already been taken for the Dadri ones. Dadri has been paid, I guess, through debt. Then for the Ratlam, the new capacity expansion, I think quarter four, they're using the IPO money. Fine. So it seems that mostly now IPO money is being used, not a lot of debt is being raised. I guess so, if I'm correct. Because the Dadri one, the Dadri, I think that's Dadri, sorry, 159 crores has been used, already being used, and it's already included in this debt. So this debt has been used for Dadri, and the IPO money is being used for good. All right, IPO money, so not a lot of interest costs will increase, hopefully. So that is it. That is Fujiyama Power going for massive expansion. Let us see the kind of growth they can bring in. And I guess very important, it's a direct to consumer company, not a B2B company. So that is it. Bye.